Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to share a couple of ideas with you that I have going into tomorrow's non-farm payroll. Now, of course, we know that absolutely anything could come out of this report, and it's hard to want to just blindly step in front of it. A couple of things that I'm seeing, the first of which is that if this pattern of higher lows in the VIX is going to continue to remain intact, then tomorrow looks like it's going to be a pretty pivotal day. You can see how we've had a perfect tag of 3 instances of this trend line, and here's the 4th. So if we were to apply the Bollinger Bands to this chart, you would also see that we were extended to the downside. That's one more thing that backs the idea of this trend continuing and the VIX getting a pop tomorrow. Now, of course, we don't know if that will happen, but it's the first part of the story that I am working to paint. If we come over and look at the Nasdaq composite, we know how important these fire lines tend to be in our technical analysis, and we've come right up into that today. You'll also notice the Nasdaq was lagging the S&Ps a bit, so that'll be something that I'm keeping an eye on as we get into tomorrow. Another chart that looks very similar is here looking at SPY, the Spider ETF for the S&P 500, and for this particular 618 I've used the last high that we made back up here at 213.78 and this biggest low. So I always say that the bigger the swing, the more significant your retracement. In this case, the 618 is very nice with that snow line right there around 201. I think you're going to have everybody looking to 200 for the psychological value of it, but if you get just a little bit through that, don't forget that that resistance is just overhead. So between the VIX and where those indexes stand, I think we're due for a pullback in equities. The other part of this story that I wanted to share was coming over and looking at a calendar. Now, of course, this is a little bit of if this, then that type analysis, but I'm kind of thinking that if we head into tomorrow's employment data, and who knows, maybe tomorrow just ends up being a mess or whatever it may be, we'll address that when it gets there, but if we are able to see this selling that comes into next week, don't forget that the March expiration is sitting right here on the 18th. So I just think that instead of getting ridiculously bullish if we do start to break down, just remember that it would be normal to see a descent throughout these couple of days, let the VIX revert back to the mean, and then once everyone is bearish again, suck all the premium out of those contracts into the March expiration. So I felt like all of those had a pretty decent confluence. I think they're all kind of saying the same thing. Now all we need to do is see if we can get it to play out. So that's what I'll be looking for over the course of the next 2 weeks. Over the course of the next 2 hours, I'll be looking at this. So if this is something that you are interested in, tonight Eric is going to have part 2 of his introduction to ThinkScript. It's going to be from 6 to 8 Central. Now, if you missed this and you would like to catch it, you can still buy it and get the recording of it. But Eric is one of the best teachers I've found. He has an excellent technical mind, and he's also very good with Thinkorswim. So if this is something you're interested in, you can sign up at the link after this video, and I hope to see you there.